Alright guys, we are here today. It is Wednesday. We got a non-farm employment data coming out in about an hour. Non-farm employment data coming out in about an hour. Where's this coming from? Non-farm employment data coming out in about an hour. Where's this coming from? Non-farm employment data coming out. Where is this coming? About an hour. Okay, I'm sorry guys. We were just in the epic loop of echoes. I'm sorry. Alright, I'm here. What's up guys? What's up, going with the wind? Faye, Ray, Big Foe, T, ER. What's up guys? Good morning. Alright guys, so markets are still down from all the stuff yesterday. Q at 520s, AMD down big from earnings. Yeah. What's wrong with the market, John? 2 months of stagnating. Well, I mean, the market's up 105% in 2 years. A couple months of stagnation is not a unhealthy thing, I think, to be honest, if we're looking at it objectively. Alright, we're awake. Yeah, I don't know, man. I'm not betting against the social media company or a search company. Meta was under $100 a few years ago, and I was pretty bearish on it, right? Like, I was like, oh, Meta's gonna, and my logic was sound, I think. Like, the logic at the time was that Facebook was losing steam. Instagram was getting essentially replaced by TT. They lost billions in the metaverse projects, and I just thought that Meta was, I wasn't optimistic about it. It's not like I shorted Meta, but fast forward a few years later, Meta is up 600% since that day. So, I mean, or since that time period, I should say. So, yeah, I'm not really going to bet against stuff like that. And I think Google has more resources than anybody. They have one of the best long-term charts of any chart. They have one of the best long-term EPS graphs and revenue graphs of any graphs. And so, Google's going to be fine, I think. But I have no idea. I'm not an investment professional. I'm not liable, no matter what. But all right. I look like Peter Sutherland. Bro, people say I look like so many different people, bro. You know what I realize is that I look generic. I've got to look generic, bro. Like, you know how many people say I look like others? They're like, hey, bro, you look like Forrest Griffin. They're like, hey, bro, you look like Paul Felder. They like, you look like Ryan Felipe. They're like, you look like, who is this? Peter Sutherland. Like, I've just accepted I look like a bunch of different people, apparently. Yeah, this is not financial advice. Yeah, weird, Mo. I remember Netflix taking a dump a few years ago. Yeah, Netflix hit 1,000 yesterday. It's back down. Disney had earnings this morning. Alphabet's Waymo to expand its network and operation partnerships to open new markets, including Austin, Atlanta this year, and Miami next year. All right, guys. You look like ginger Tommy K. Yeah. I can see that. I'm less ginger. I'm not red haired though. Like, I don't know if you can tell. I'm mostly like brown, dark haired. I would say I'm a better looking Tommy K. That's all I'm saying. Alright guys, let me put a poll up here. Remember, we got prelim NFP data coming out. Let me change this. The call is not in progress here. Alright, so prelim NFP data. Expected at, what's it expected at today? Alright, we got prelim NFP data. It's expected at 150,000 this morning, 150K. Drops at 8:15 a.m. here. There we go. Today, prelim NFP, and Friday, NFP and unemployment. John, the consistency is impeccable. Consistency in what? No, I'm definitely not ginger. I'm brown haired. If anything, I was born kind of blonde. You know. Oh, streaming? Oh, thank you, man. Yeah. So we're gonna do a poll today. Oh wait, I'm floating in the ether up here. Hold on, let me bring myself back down to earth a little bit. There we go. Back down to earth. All right. So, what's a good poll today, guys? Let me ask you guys. What should I do for a poll today? What's a good option today? What's the good question I should ask? Y'all are talking about gold crashing. Bro, it's Canelo. I've heard Canelo before. I've heard that you look like Canelo. I've heard that one. But my hair's not red. Yep. Our trash is out there too. Will Google rebound? Does NFP have a high impact on markets? Yes. NFP definitely has a high impact on markets. It's one of the higher impact reports that we get every month. Look, guys, so the question needs to be mostly like universal in finance. Like, it can't be isolated to like one specific stock necessarily. It needs to be kind of like universally. It needs to be universal, I mean. So Disney, again, posted some earnings. Yeah. No, not. I wouldn't even talk about you. There was a couple, Matthew. All good, bro. How about this? Does the market correct? Does the U.S. market correct over the next 6 months? Yes or no? Vote on the poll. Does the U.S. market correct over the next 6 months? Yeah, so for gold, guys, let's talk about it. All right. So here's the thing, right? Like, I see some people that are like, oh, gold's the greatest. I see some people being like, yo, gold is, you know, gonna crash or something like that. I don't know. Gold is very specific in how it moves. it's very long term in everything, which means it uptrends long term. Like when it uptrends long term. It's why a lot of people love buying gold, is because gold tends to uptrend long term, as well as it downtrends long term as well. And so it can uptrend for a decade, it can downtrend for a decade, really. It tends to uptrend a little bit longer than it downtrends, but there's been a couple times in history in which, like if we take a look at gold here on the left side, there has been a couple times in history in which gold has downtrended for an extended period of time. You know, like the easiest one I can see is probably right here. Here, gold downtrended from 2012 really all the way down to like 2018, 2019, so for like 8 or 9 years. But in that context, gold has also been uptrending now since that period of time, right? So gold has been uptrending for 8 or 9 years now. And so for me personally, even with it breaking highs, I'm not super interested in buying it right now. I think there's a time where, like, I'm going to buy gold on down years. The time to buy gold is, for me, is when it's weak, not strong. Because I can dollar cost into gold, I can DCA into gold over like a decade period of time, like with a strategy like, and again, I'm going to preface this with, I am not an investment professional. I am not liable if you lose money. I have no freaking idea what I'm talking about. If you copy me, you might lose. I do trade off stream. Sometimes I lose off stream. I'm not even guaranteeing to be a good trader. Understand CFTC 4.41. Do not copy me. I'm not an investment professional and not liable for losses. With that said, it out the way though, a strategy something like gold starts to downtrend for like a 6 month period to a year. When that happens, the plan is to like DCA into gold every month, buy a set amount of gold depending on my budget, and dollar cost average into gold. Maybe every month isn't necessary. Maybe like buy a big chunk of gold every 6 months, 4 months, 3 months. You know what I mean? And then understand that it might continue dropping, but the plan is to hold it like long term, like hold it for 10, 20 years, 30 years. That's a situation where you probably do very, very well if you do that, but you got to wait for it. You could also, at the same time though, like that's a strategy, but you could also probably get away with just DCAing into gold all the time, right? Like an example is like every 6 months I'm going to buy a little bit of gold no matter what, regardless of whether it's uptrending or downtrending. And that's the true like definition of DCAing. I use DCAing like a little loose. Dollar cost averaging is really taking periodic purchases of a specific asset regardless of price, right? And it's the goal is to curb volatility. And so any of those things work, but for me, I'm just not interested in buying gold right now. It's too extended on the upside. Yeah, Disney had earnings. Yeah, let me see if I can find all of it, man. Yeah, so Disney did have earnings. Disney posted 176, beat 145. Sales of 24.7, beat 24.6 expected. Here's the link for that. Or there's the not the link. There's the earnings right there in chat. Is the music too loud? Sorry, I turned it up for the earnings yesterday. Yeah, here, my bad, guys. Yeah, here, I'll turn it down. Hold on. It might go up for a second. Bear with me. I'm going to turn it to 0 dB, like this. And then we're going to bring it down a little bit, down to like here. Let me know if that's good for music. It should be pretty good. Now, it would have to be like a swing trade on pullback with stop of whole 9 yards. Can anyone tell me if they think the SPY will drop? I mean, that's a little bit too loose of a question, brother. That's like saying, hey, is cake good? Yeah. You know. You said a correction is a 10% correction is once a year. But we had one this summer, right? Yeah, we definitely had one this summer. I don't know how big the correction was this summer. Let's see. I can't remember. It's been a minute. Yeah, but the key word is at least. We average at least one correction. So yeah, we corrected from 505s down to 420s. That's a pretty big correction too, I guess. Definitely at least. Yeah, that was a 16% correction. So yeah, we corrected for sure last year. But we've gone up so much since then too. I don't know, man. Again, I'm not saying we have to correct. Like people misconstrue what I'm trying to say. What I'm trying to say is this: I'm not interested in buying up a ton of stuff right now, but there's a very good chance that we keep running. And if we keep running and I'm wrong, I will start buying stuff up too. I'll probably take more of a DCA approach and stuff, but I will keep buying stuff up if I'm proven wrong, which I very easily could be. I think there's too much ego floating around on YouTube with analysts, right? There's too much ego, where they say something has to happen. Like, it mostly comes from market crash predictors because they just want to be right. They don't want to lose the credibility of being wrong about them, telling everybody to sell, and then the market ends up just ripping up huge percentages. And I think that kind of bruises their ego a little bit. But I could very easily be wrong here. I'm not guaranteeing anything. I have no freaking idea what we do. If anything, I'm just being a little cautious right now because I think markets are up huge right now. And the Fed's a little bit more... I think the market's overall fearful of inflation. And I think if that continues to get worse, we could see some corrections, right? But it doesn't necessarily mean it has to happen. It's possible, but it doesn't necessarily mean it has to. Yeah, I mean, Mo, I think you have a fundamental misunderstanding of DCAing. Either that or you are taking too big of size or buying the wrong stocks, right? Like, you should have been able to make money DCAing in almost anything right now over the last few years. The market has gone up almost every dip. The market rebounded very strong from in the last 4 or 5 years, And so if you're losing money DCAing into things, I think you have a fundamental misunderstanding about what DCAing is. Dollar cost averaging is an investment strategy. It's not a day trading strategy. I'm not talking about day trading. I'm talking about long term. I'm talking about an example of one is okay, if I buy the NASDAQ here, let's do a long term chart. All right, so you see this dip right here on the NASDAQ. So you see this dip on the NASDAQ back here. Last year, this is the dip, the 16% drop. Dollar cost averaging would be hey, I'm going to buy some here. I'm going to buy some here, right? Averaging in. And then maybe I'm going to buy some here if I get it in time, right? Over time, averaging into a position like this. And then it's hey, I'm going to buy some here. 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 I'm going to buy some here, right? If you do that, you're going to be up huge from those positions. Right now, you're going to be up huge from those positions, but the goal is it's a long-term investment strategy. It's not something where we're talking about day trading or anything like that. And even swing trading, dollar cost averaging is not swing trading. It's investing in healthy long-term assets. You're talking about adding the losses in day trading. Yeah, I mean, you should almost never do that. It depends on if it's the plan beforehand. I'm okay with scaling in to positions, but I think you're just talking about doubling down your losses when you lose and stuff like that. That's a different thing completely. Yeah, dollar cost averaging is an investment strategy. How do you think this news will affect markets? I'm not sure. We'll have to wait and see. We got some time before it drops, though. All right, we'll put the timer up here. We got about... All right, yeah, we got about 37 minutes left. There's the timer right here for the data. I don't know. Where did you see that news, Faye? Let's take a look at. Dude, ChatGPT's gotten so much better at querying news for the day here. So we're going to talk about the biggest stories. Here are the major U.S. stories of the day. First one is volatility and tariff concerns. The U.S. financial markets are experiencing heightened volatility due to recent tariff announcements and geopolitical tensions. Strategists caution that these developments could lead to deeper market pullbacks. Historically, the market has seen an average intra-year decline of 14% over the past 40 years, with a winning rate of 83%. Yeah, so again, this is something that I'm actually talking about. Historically, the market has seen an average intra-year decline, correction, of 14% over the past 40 years. So like we average at least a 14% correction once a year is what they're saying here. 83% of the time we do that. Investors are advised to exercise caution and avoid impulsive decisions during this period. All right, so that's the first thing. Again, I don't know how I feel about this though. I like a correction, but I also think if most people think we're going to correct, that sets the tone for big finance to just run the market like crazy. I don't know. I'm not telling you what to do. Recent earnings have significantly influenced stocks. We had Google earnings, Alphabet earnings, we had AMD earnings, we had Chipotle earnings. AMD dropped after their announcement. Disney saw a stock uptick, buoyed by better than expected earnings and revenue. So Disney had good earnings here. Chad, if we take a look at Disney went up. It's kind of flat from their earnings. It didn't really end up doing anything. So, but decent earnings nonetheless. Corporate adoption of Bitcoin. We had the crypto czar guy talk yesterday too. Inspired by MicroStrategy's substantial investment in Bitcoin, several companies across various sectors are now incorporating Bitcoin into treasury reserves to boost share prices. While this strategy has led to significant share price increases for some firms, experts warn of the inherent risk due to Bitcoin's volatility. And again, so going into the tariff news today, guys, the U.S. has recently imposed tariffs on Chinese goods, prompting them to retaliate with their own retaliatory tariffs of up to 15% on U.S. imports, including energy products, which is the one that's going to hurt us the most, I would say. These actions have caused notable fluctuations in global markets, with the Dow Jones experiencing declines. Investors are closely watching these due to their potential impact on the economy. Gold prices are reaching record highs. Gold has surged to record levels, currently approaching $2,900 an ounce, marking an 8.5% increase this year. 8.5% increase this year, following 30% in 2024. This rise is attributed to investor concerns over tariffs in the economy, leading many to seek the safe haven asset of gold. People are thinking $3,000 an ounce if this current condition persists and the economy weakens. Banco Santander is making a bold move to expand its corporate and investment banking operations in the U.S., aiming to establish a stronger presence in a market traditionally dominated by major players like Goldman Sachs and J.P. Morgan. Investors are cautious amid AI market fluctuations. So top investors, they're saying, are expressing caution following significant sell-offs in U.S. tech stocks related to AI. The debut of DeepSeek cost-effective AI reasoning model has raised concerns about potential AI bubbles, drawing parallels to the dot-com bust. Prominent figures in the investment community highlight the importance of market psychology and the risks of speculative behavior, end quote. Yeah, so that's where we're at now, chat. People are nervous about the tariff negotiations. Yeah, for sure. It could correct the market. It might not. I don't know. John, can you think of any soon catalyst for gold to go down a bit, allowing long entries? Okay. I mean, you got to look at when did gold correct last time and what was going on geopolitical, macroeconomics wise, right? The last time gold corrected was here, right? And this actually makes a lot of sense if you really think about it. Okay, so here is 2011, 2012, right? Gold corrected for almost a decade after that. Why did this happen? To be honest, it happened because we had market and economic stability. right? Like the reason gold ran up here was because of the 2008 financial crisis. And so when the economy settled down, when finance settled down, when the market was running, when the economy was kind of stabilizing from the big disaster of 2008, that's when gold started to come back down too, because people hedged less with it, if that makes sense. People hedged with gold against economic and finance weakness. And so gold ran up, following 2008. Here's 2008 here, and gold just flew up, right? But once it started to stabilize, gold started to correct as well. And so with all of that context in mind, asking, hey, when does gold correct again? I don't know. Gold will correct if we show economic and market stability. And so that's essentially what it is. Gold will correct if we show economic and market stability. So yeah, all good, Fabio. No worries, man. Uber sees H1 mobility at plus 20% year over year, and delivery growth is to remain stable, according to prepared remarks. Disney CFO says they feel great about the quarter coming in well above expectations. Disney also said that they're going to make $1 billion this year in streaming. So, Meta at 705. Meta's still up big. AMD dipping down big too. All right, guys, we got 30 minutes before prelim NFP data. 30 minutes, chat. Be ready. Honestly, my channel's grown a lot, chat. It really has, dude. We are averaging almost 500,000 views a month, dude. Crazy. Yeah. Thanks so much for the growth, chat. Appreciate the love. Genuinely do. PayPal, yeah, PayPal, I don't know how I feel about it, to be honest. I really don't. PayPal down to 78.20s from their earnings report. Big dip. Is it time to buy the dip, y'all think? I don't know. I remember buying the dip in PayPal and people were trying to talk me out of it when PayPal was at like $60. Yeah, definitely top 3. AMD doesn't have enough data centers. They're not in the same league. Yeah, well, that's what disappointed AMD for sure, is data center revenue was lower than expected. That's one of the big misses from AMD. Hey, thanks, guys. Yeah. Man. Yeah, and today, guys, we got more. We got Amazon earnings after the bell. We've got, we got Amazon earnings after the bell. We have, non-farm employment change. We're going on Top Step TV later. Tomorrow we have jobless claims and unemployment. Friday we have non-farm payrolls and unemployment. So a lot of stuff dropping this week. Oh, today we have ISM Services PMI too. So we got ISM Services. A bunch of Fed members are speaking, specifically Chicago Fed President Goolsbee, Fed Governor Michelle Bowman, Fed Vice Chair Jefferson, Tom Barkin is speaking. So we got a bunch of Fed members speaking today. Tomorrow we got jobless claims. Friday we got non-farm payrolls and unemployment. And then next week's super busy. Tuesday we got Jerome Powell in the semi-annual monetary policy report with Congress. I'm pretty sure he speaks. Let me make sure. I'm pretty sure. I don't actually see it. Semi-annual monetary policy report. They should have scheduled it at least. I don't see it yet though. Yeah, I'm pretty sure they scheduled it yesterday. Yeah, so it's going to be 2/11 at 10 a.m. So that's next Tuesday at 10 a.m. We're going to have Jerome Powell and the semi-annual monetary policy report to Congress, specifically for the Senate. You know, there's two sides of Congress. There's the House and the Senate. The Senate will be first. It's going to be at 10 a.m. It's going to be basically Jerome Powell testifying in front of Congress, specifically this one in front of the Senate, and it can move markets. We're gonna stream it live. That's next week. Following that, on Wednesday we got CPI inflation data. Thursday we got PPI inflation data. Friday we got retail sales data. Busy week. And then today we have Amazon earnings also. So. So we did have some earnings. Again, guys, Uber showed up this morning. Let's take a look at all the earnings that dropped today. Uber showed up this morning. They posted 321 EPS, beat the 50-cent estimate. So Uber did really, really well in terms of their EPS versus expected. Again, they expected 50-cent EPS. They showed $3.21, a 542% surprise of EPS beat. Revenue came in at 11.96 versus 11.76. They must have seen something they didn't like, maybe guidance numbers for Uber, because Uber ended up dropping pretty significantly from this report. Does anyone know why Uber was down? Let me get a little bit deeper in here. I think probably guidance. Okay, yeah, gross bookings outlook for Uber is down, right? So for the current quarter, it said it anticipates gross bookings to grow 17% to 21% from the prior year, $42 billion to $43.5 billion. At the midpoint, the forecast was below expectations at $43.5 billion. So, yeah, they missed that. That's why. They also only showed $1.79 billion and $1.89 billion adjusted earnings before interest, taxes, depreciation, and amortization. So EBITDA. So that's why they missed. Walt Disney, again, posted 176 versus 144 EPS. BDPS missed revenue, though. They posted 24.7. They expectation, they only showed 24.69. But Disney is up a little bit on this report. We also had Novo Discs. They BDPS beat revenue. They're up some from this. Boston Scientific, BSX. They're kind of volatile, low liquidity. Toyota Motor Company, they beat EPS and beat revenue. They are up a pretty big amount, although the liquidity is kind of low for this one as well. We had ACB, Aurora Cannabis. They are up big. I don't think they ended up posting their results, but ACB was one of the OG cannabis stocks. They did post. They posted 88.2 million Canadian revenue. They expected, what did they expect? They expected 57 million, so way better than expected revenue, and they're gapping up some. Again, though, I'm just not confident that any cannabis stock is going to, this is a Canadian market. I'm just not confident any cannabis stock is going to unlock access in U.S. markets. Politicians are they lobby against it pretty regularly. Law enforcement are the biggest ones that lobby against it, specifically because, they don't want to lose that business, which is kind of a conflict of interest, prosecuting people for something that is, pretty consistently, less harmful than alcohol that you can buy at gas stations. You know what I mean? So it's just a little hypocritical, but nonetheless, ACB is up big today. It's at 419. Other companies that had earnings today, I don't think we had any other big ones today after the bell, though. Again, the big one today after the bell. Oh no, that's tomorrow after the bell. So the big one after the bell tomorrow is Amazon. We have ARM today, which has had a crazy run since it's this one IPO'd not that long ago. Look at IPO back here. I remember I bought this one on IPO day, rode it all the way up to 160s. I'm not in it anymore, but I held it for a long time. We also have Ford after the closing bell. Did we lag a little bit, chat? Did we lag? I don't think we should. I don't think we should ban alcohol either. I think we should have an even standard of what's allowed versus not allowed. And my biggest issue, to be honest, is the pharmaceutical industry. They are absolutely the ones that are keeping it illegal, right? And they're painting it in such a negative light for everything. And it's not like I'm a parent. Like, I don't use that stuff. You know what I mean? But in terms of just tax dollars being wasted on something, my tax dollars are getting wasted on prosecuting people for cannabis, 100%. It's objectively less harmful than alcohol. Alcohol causes far more deaths, far more accidents, far more problems. It's far more dangerous as a substance. The toxicity levels are higher. Yet you can buy it at gas stations all around the country for the most part, and cannabis is like demonized and illegal, and it's a silly thing that we're wasting tax dollars on. And the pharmaceutical industry recognizes this, right? And they don't want it legal because it's going to, render a lot of their drugs that they've spent millions on obsolete. And so, because it causes no physical withdrawal symptoms, it doesn't make people addicted to it physically in the same way that a lot of their synthetic drugs do, and they just don't want it legal. And so they lobby heavily against it. And it's very self-evident, it's obvious, but again, that mixed with like law enforcement's lobbyists keep it illegal, basically, especially in places like Texas. But it is what it is. All right, gold at 28.90s here, chat. 28.90s. I don't know. Today's prelim jobs data, it's called the non-farm employment change, right? It's non-farm employment change. We'll see what happens. Snapchat at almost 12s. Yeah, I mean, I didn't say it wasn't addictive, right? Coffee's addictive. Candy is addictive. You know what I mean? Cigarettes are addictive. Alcohol is addictive, right? I didn't say it wasn't addictive. People can get addicted to anything. What I said was that it wasn't physically addictive. Not in the same way. There might be some physical addiction, but it's certainly not going to cause like massive sickness and withdrawal symptoms like alcohol will, and like a lot of the other pharmaceutical drugs that, it's certainly not going to cause the same type of thing. Yeah. And again, my biggest issue, to be honest, as a parent, this is my biggest issue. My biggest issue is that cannabis is dangerous because it's illegal. And you have to go to sketchy drug dealers. And they will eventually offer people other stuff. That's why it becomes a gateway drug, is because they say, hey, I've got this stuff. You want to try it, because they're illegal dealers. Right? If you regulated it at dispensaries, it wouldn't have the same effect. It wouldn't be nearly as much of a gateway drug as it is when it's illegal. And it ultimately is much more dangerous for people in general. People are going to consume it regardless of its legalization status. And you're basically causing people to go through really sketchy means, and it's very dangerous in that regard. And so I worry about kids, right? I worry about kids, to be honest. Yeah, Ford is at 4:05 p.m. Ford has been, the stock is only at $10 a share now. It's been kind of weak over the last few years. Illy has a new law where if you... Yeah, that's crazy. Yeah, I'm going to trade today for sure. I'm waiting for the data to come out in about 15 minutes, 20 minutes. First, though, we got non-farm employment change data dropping in about 20 minutes, 17 minutes. And so I'm going to let that data come out first before I take trades. It's just too volatile and risky to, I think the market's kind of choppy right now and a little unpredictable as well. So I'm just going to wait until it stabilizes after the data comes out. And again, like, I don't do any of this stuff. Like, I'm looking at it from a harm prevention, like, perspective. And so, you know, a good dividend? I don't know. What's the dividend payment for Ford? I don't trust Ford. I like Ford long term. I think Ford's going to be fine long term. I just think it might not grow very much. That's the only reason I don't like Ford as a company, is that it might not grow as much as some of the other companies. It might not have as big a potential as some of the other companies. I don't know if we're going to go up or down. We're expecting right now 150,000 non-farm employment change report. Now, this is the prelim report. This one's called ADP non-farm employment change, right? So this is a little bit different than the non-farm payroll data. It's kind of like the prelim NFP data. So yeah, this data drops in about 15 minutes. Gold pumping up over all-time highs today. The NASDAQ at 520s. If we look at like a 4-hour chart, we do see we've stagnated basically since the start of December. I don't know what we're going to do now. To be honest, though, most of the time if we slump big, it's not after stagnating for this long. So typically stagnation like this can be a good thing in some ways, where we pick up steam and run. It's possible. I mean, it's also possible we come back down and we just dip from this. That's possible too. But generally when we dump, it looks more so like big run, dump, like this, right? Like that's what it generally looks like. And I don't know if we necessarily see that right now. We just got to kind of wait and see. All right, guys, Google sitting at 193s. We got Meta still over 700. Man, Meta's been crazy strong. Crazy strong. All right, chat. Hey, there's the 8 a.m. scrum, and it's now 8 a.m. Let's see if we get any news releases dropped this morning. So far, we have IBM filing for, what is this? IBM filed for a 5-part denominated notes offering. They didn't disclose the size, though. All right, so the Fed's Barkin is speaking right now. He says hard to know what specific tariffs are coming, according to Bloomberg. So we're going to put some of this news up in chat as well. Yeah, Palantir has been a crazy move, to be honest. Palantir, it's now dipping down a little bit. It hit 106s yesterday, or the day, yeah, yesterday. Now dipping down some. Again, Fed's Barkin is speaking right now. Yeah, so let me check those out. So yeah, we had a lot of news today. We're going to cover a lot of this. Let me open up Discord. So yeah, so Apple fell 3% in pre-market after China reportedly considers a probe into the App Store practices. So Apple down a little bit in pre-market. Again, we got less than 15 minutes before the prelim non-farm employment data comes out. So Vanguard made it cheaper to invest in ETFs, what the fee war means for investors. So Vanguard Group has slashed the cost of investing in its funds in a record move that is expected to save investors over $350 million this year. We also have Tesla sales are diving in Germany and across Europe too. German trade group reports 60% year-on-year fall in Tesla registrations. This is in lower Germany. In January, sales of the EV company have fallen across Europe as well. German trade group reported again new vehicle registrations fell 60%, which is the biggest percentage drop for an automaker that's sold at least 1,000 cars in the country. Looking at some other stuff here. Amazon and Temu's owner sees stock market pressure as U.S. Postal Service to stop accepting Chinese parcels. Huh, interesting. Yeah, whether Palantir is gonna be a good hold, I'm not sure. It's up a lot. The PE ratio is crazy high for this one. Like, to be honest, Palantir is a good company, but the PE ratio is kind of crazy. All right, as of today, Palantir has a PE ratio of about 185 PE ratio. So Palantir's PE ratio is over 180. And so I'm not saying it's not a good time to buy it. I'm saying the price to earnings ratio is obscenely high for Palantir right now. Hey, thank you, Andrew. Yeah, the market's been sideways for a while now. Nvidia's one to watch too after AMD's earnings, right? So we had Nvidia earnings. Or we had AMD earnings yesterday. Nvidia's pumping up though. It's still under 120s, but it's had kind of a whirlwind. Like, here's Nvidia over the last like couple months really. Nvidia's down. It's up this morning though. It's almost to 120, so that's an optimistic thing. Like, that's a good thing. We got 10 minutes chat, 10 minutes before a prelim non-farm employment data comes out. Palantir's hype driven. Looking at our poll, does the U.S. market correct over the next 6 months? 70% say yes, 30% say no in the poll. Interesting nonetheless here, guys. Again, let's get ready for the prelim NFP data. It's coming soon. What else we got? It's Wednesday. We had the mortgage rate come out today. So the mortgage rate showed up a little bit lower today at 6.97%. Still objectively high, but last time it showed up at over 7%. Today it showed up at 6.97% for the 30-year mortgage rate. Again, we got ADP non-farm employment. I'm showing 150 expected. Some other places are showing 148 expected here. So we got that coming out. Again, we got a lot of Fed members speaking today. We got services PMI later on. We got Barkin speaking. The ECB's Lane speaking. We got Barkin speaking right now, really, I think. Bowman speaking later on this afternoon. Jobless claims tomorrow. So non-farm payrolls are expected at 154,000. Unemployment's expected at 4.1% on Friday. How important is it for gold and the NASDAQ? Well, today's data is it's relevant, but it's not as relevant as Friday's report. Today's kind of like the prelim numbers. They don't move the market as much as Friday's, for sure. Call me crazy, but I feel this year is going to be the most up and down chop we've had in a while due to random nature of the current. Yeah, maybe. Where's Bitcoin at right now? Let's take a look. Snapchat went all the way up to 12 a share for Snap. Bitcoin's still under 100K, but it's at 98.5K now. What do you guys think? Do you think this year is going to be bullish or bearish for the rest of the year? I think it's hard to tell, to be honest. We could speculate on, but I'm not sure. I got to start posting on Twitter more, I think. Yeah, so I think I'm going to start doing this thing on Twitter where I do like a daily, on X, like a daily news update around 8 a.m. every single morning. 8 a.m. daily news update. We might do another one in the evening too if we can help it. If you want to give me a follow on Twitter, it's @BeginnerTrades. @BeginnerTrades. I'll put the link up here if you want to give your boy a follow. Again, we're going to start doing that, and I'm going to start my first one now. So, in fact, I'm going to post my first one now. Yeah, so we're going to post our first one right now. All right, we posted it. All right, so again, if you want to give me a follow, here's our first daily news release that we're going to start covering at 8 a.m. every single day. There it is. Give me a follow on X right there. Honestly, Meta's PE ratio isn't as bad as it could be, Harris. And I think that's why a lot of people are kind of shocked that, you know, we could have a much, like, okay, so if we look at Meta's PE ratio, all right, so I think Meta's PE ratio, even with it currently at 700 a share, its PE ratio is only 29 right now, 29.4. So Meta's PE ratio is honestly under 30. It's not bad. It's really not bad versus the price it's at. So Meta's producing. They're bringing in income. Let me edit this actually. There we go. Honestly, what happened, bro? It's supposed to be instrumentals, bro. What happened to instrumentals, dude? Sorry, I had to turn the music off. I don't know why. Here, I had to change it to instrumentals. I don't know why that guy just started rapping on there. My bad. Yeah. Predictions from MicroStrategy earnings tonight. I think it's interesting. I'm definitely watching it. All right, guys. Hey, we got 4 minutes. 4 minutes before non-farm employment data comes out. 4 minutes. I busted my lip in jiu-jitsu yesterday. Still kind of hurts a little bit. I accidentally headbutted. Or accidentally, like, I basically punched the guy's head with my face. And busted my lip accidentally. It was my fault completely. bullish with volatility because, yeah, again, guys, listen, we got 3 minutes. 3 minutes. Let's see what we get. All right, again, met at 701s. ADP. Yeah, ADP is just one of the data service providers. All right, guys, we got 2 minutes. 2 minutes. Got almost 900 here already. Early this morning, guys. What's up, team? All right, guys, a minute and a half. Hit the live button next to the play button. Make sure you're fully caught up on stream here. Major data, I mean, it's prelim non-farm payroll data. So this is called the ADP non-farm employment change. It comes out every Wednesday preceding non-farm payrolls on Friday at 8:15 Eastern Standard Time in about 1 minute. It's relevant for payrolls and data that's coming out on Friday. I'm not sure how much is going to move markets, though, but it's still somewhat relevant. We'll see what happens. I'm expecting, or they're expecting 150, anywhere between 147 and 150 is what I'm showing for expectations. Let's see what happens here. We got 45 seconds, guys, 45 seconds. Yeah. There's ISM Services, which are big. Hey, here we go, guys. We got 1 minute left. 1 minute. All right, and here we go. 5, 4, 3, 2, 1. And here's the data right here. So we showed up at 183, much higher than expected payroll data. 183 for prelim non-farm data. 183 higher than expected. 150, 145 to 150 expected. We ended up showing 183K versus 148K expected. Market didn't really move, though, from this, to be honest. I wonder if the Dixie moved. Let's see. Dollar index spiked up on this report. Look at this. The Dixie spiked. Oops. Dollar index spiked. Let's take a look at the NQ. NQ dipped a little bit on this report. Look at the drop on the NASDAQ. So NASDAQ dropped. Dollar index spiked. Gold dropped on this report. Again, 183 versus 150 expected, roughly. We'll put the data up on screen. Here's the data right here. What do you mean by alpha? Somebody said, can you explain the value of this program if there's never any actionable alpha here? Do you mean what's the value because I don't tell you what to do? Is that what you're asking me? Because the answer to that is pretty simple. Look at the dollar index spike, the NASDAQ drop, and gold drop on this higher payroll numbers. I think these higher payroll numbers are going to panic markets because it means maybe worse inflation pressure. Look at the reactions we're getting into this. Yeah, I mean, the value of my channel is very obvious, which is we provide very up-to-date economic reports. Number one, we're the most consistent in terms of that. We drop these economic reports as soon as they're out. We've got a bunch of different sources and we give you that data literally as soon as it happens. We cover the market reaction. Like, people always, like, in the day trading world, people who are usually selling courses or selling their own services, or people that have been kind of misled into thinking that they need to follow like some type of super expensive mentor, usually by people that are selling those mentorships, are the ones that convince them that that's the truth. The reality of it is, I'm not even claiming to be a good trader, and my channel's not about that. My channel's about economics. I'm teaching new traders how to avoid the pitfalls of trading. That's certainly happening, as well as like we cover every major economic and finance event. So we're really like a market news and economic channel. Like I don't even claim to be a good trader, and I shouldn't have to. The people that are in, anybody that's been in the market long enough is going to recognize that nobody freaking knows whether we're going to go up, down, or sideways. And the people who act like they know the most probably know the least, to be completely real. And so I hope that all makes sense. Like, don't get wrapped up into this thing where you got to pay thousands of dollars to some mentorship because some dude on the internet tells you need to. It's just not the truth at all, you know. All right, guys. Hey, thank you, B. Appreciate it, man. Yeah, look, so this prelim payroll did affect the market, and sometimes it doesn't, right? But, like, look at gold dip, look at the NASDAQ dip, look at the dollar index. A lot of the time, when inflation is a fear, we're going to get this type of correlation, right? What kind of correlation do I mean by that? We're going to have the Dixie shoot up because a strong dollar inflation means a strong dollar for the most part. And we're going to have gold and other markets move down to a certain extent, right? It's never perfect. It's never a perfect correlation, but a lot of the time, like the NASDAQ will inverse the dollar index and vice versa. So we'll see. Here's the NASDAQ right here on the right. Dollar index spiking up, gold not really liking it. Again, higher payroll signals a stronger dollar and a stronger economy than originally anticipated. So that's why we're seeing these kind of reactions here. Let's pull top step up. Let's get ready. All right, guys. Sorry, I'm getting my NASDAQ chart up. NASDAQ did bounce back a little bit here, though, which is good, I guess. NASDAQ's been in the sideways range all morning, though. We got ISM Services data coming out later as well. Let me put that up on screen, too. Expected at ISM Services data drops at 10 a.m. It's expected at 54.2. There we go. Look at the NASDAQ popping back up. Let's watch this support and resistance level up here as well. Yeah, I appreciate it, guys. Thank you. Yeah, you know, like, here's the problem. Usually, so this is kind of what happens, and I've seen this a lot with a lot of different people I know, right? You got some people that are just genuinely, like, misled into, like, having this, like, celebrity view of their quote-unquote mentor, right? And y'all shouldn't even look at me like that. Like, I'm not a mentor. I don't know what the heck I'm talking about. But, like, they end up, like, following them around. Are we lagging, guys? I'm kind of lagging on my end. I don't know why. It doesn't show I'm lagging, so maybe it's just me. No lag? Okay, good. All right, cool. Yeah, but you got people that look at their mentors like they're freaking celebrities and whatever, and it just ends up, like, confirmation bias. I say this word all the time, but it's such a powerful thing, man. Like, people are so desperate to believe that they're spending their time wisely, following their mentor, that when somebody like me comes along and I'm like, hey, look, like, you don't need to pay anybody to do that. Like, a lot of these guys are lying to you. That's such a feared thing for them, right? Like, that's such like a hard thing for them to look at objectively. Like, hey, am I wasting my time here, right? That's such a difficult thing for them to look at objectively, that a lot of the time, instead of being able to be introspective and be like, yo, maybe I'm spending too much money on mentors, maybe I'm doing this, instead, they just look at me and they just kind of get mad at the messenger, right? And they're like, oh, and they just look at John and they say, you don't provide anything, you don't do anything, you don't give out stock picks, you know? You don't sell courses, you don't even claim to be a good trader, right? If anything, they're helping me, because, like, those are all things that I'm very proud of. I don't sell a course. I don't claim to even be good. I'm giving you guys the real truth of it, not some fabricated embellishment. And so, yeah, I appreciate the love. Thanks so much. Oh, we took the trash out today, bro. We definitely took the trash out. All right, so look, we went all the way up to this level, kind of broke highs on the NASDAQ and came right back down. Honestly, we're super choppy right now, and maybe the market's waiting for ISM Services. That's possible, too. If anything, if you guys can learn anything from my channel, right? Like, people act like you just don't learn anything here. I think people learn here more than anywhere else. Y'all know a lot of you guys have learned about economics right here. Y'all have learned how the stuff works. Y'all have learned what to pay attention to. Y'all have learned what, like, rates and rate decisions and the Federal Reserve and all that stuff means. Y'all have learned about earnings and metrics and all this different stuff. And so y'all have absolutely, a lot of y'all at least, have absolutely learned a lot more information than just kind of like basic generic day trading strategies that everybody and their grandmother are teaching out here on YouTube. And so, yeah, I think people find value here for that specific reason. Even like the dollar index, right? The dollar index is starting to pull back. Yeah, we'll see what happens. I only found 2 people not selling courses that have knowledge. You are one of them. Thank you, Drew. Appreciate it, man. Thank you, C. Appreciate it. Had that happen yesterday when this dude... He might have been trying to scam you, Nick. You know how they go, man. They basically, like, run into you, hope you don't have cameras, and then act like it was your fault. Some people are just programmed to where if they run into you, they're never going to admit fault, right? Like, they're just terrible people, and they're always going to just try to blame you for it. You know. Oh, I have no idea what I'm talking about, Cryo. Yeah, I think the market's waiting for ISM Services. I'm just glad your channel is politically neutral. Yeah, I mean, for the most part. I mean, I like different policies and different things. Like, I go by policy, right? I dislike all politicians. And so I just kind of avoid the whole realm if I can. All right, so Chevron says they're licensed to operate in Venezuela unchanged in its contact with the current administration about Venezuela. U.S. sanctions on Mexico and Canada could boost their oil in Venezuela. All right, so the U.S. Postal Service is going to continue accepting China and Hong Kong packages February 5th, according to Bloomberg, which is today. And again, Fed's Barkin said earlier he doesn't know what specific tariffs are coming, according to Bloomberg. You should at least offer mentorship or memberships. I do, bro. You could become a member, dude. You got to subscribe first, usually. So a lot of the people that are saying, hey, I can't join a membership is, like, they just haven't subscribed. The irony. Like, look. If you click this join button right here, guys. Like, if you hit this join button right here, you can become a member. I mean, you don't get anything extra for it. It's just a way to help support the channel. And You get these coveted beardless John emojis. You get Carol. You get Rosie, the German Shepherd. This channel is pure gold. Hey, thanks so much, man. World Pets guy. Thanks so much. Can you explain ADP national employment like I am a toddler, please? Yes. So imagine non-farm payrolls is a big lion that influences the pack of finance. All right. This Friday, we have non-farm payroll data coming out. It's going to move markets. The market fears inflation. If we have higher payroll numbers, the market could panic and we might see big bearish action from higher payroll numbers. Okay. I don't know why Christmas music is playing, guys, but we'll figure it out after I'm done with this. Look at the market pop up. All right. So imagine the big lion is non-farm payrolls this Friday, right? Everybody's going to be watching it. We'll have thousands of people here tuning in. The market fears inflation right now. And so if payroll numbers are stronger than expected, signaling a stronger economy, i.e. potentially more inflation problems, because the stronger the economy is, the more potential inflation problems are there, right? That's this Friday, non-farm payrolls numbers. Big report, big catalyst. Now imagine that big lion had a little baby son who had much less influence over the pack of lions in finance. That's what the ADP non-farm employment change data is. It's a little bit early data, prelim data. It's definitely not as influential, but it can, I'm not going to say it will, but it can give a gauge on what we might see on Friday's payroll report. So it's a little bit of it's a tiny little baby lion compared to the big lion of non-farm payroll data, right? And again, today, we had a stronger payroll report than expected. The payroll numbers came in at 183 versus 150, stronger than expected. And again, I think right now in the current economy, they're going to consider that worse because it means a stronger economy and potentially more inflation. But the NASDAQ's pushing up. The dollar index did fall from this report, or did go up from this report at 815. Look, here's the Dixie, the dollar index. That's where the report dropped, and it went up afterwards. It's now pulling back, though, and the NASDAQ dropped originally when this report came out, but it's pushing up as well. I think the market's kind of down already today because of earnings over the last 24 hours, but I think that's what it is. I think that's what's going on. So I hope all that makes sense. That's the best I can do. Well, it's not that, hold on. It's not that ADP is completely different payroll numbers. One includes private and government numbers. Fridays includes both private payrolls, which is like regular businesses, and government payroll numbers, where versus today it's just private. It's just regular businesses. And so there's some small differences there. One is just more heavily watched and more influential, which is Fridays. Fridays. All right, guys, so we got a little confirmation in this level here. Again, we got ISM Services data coming out today. Big report, big data release. We put the music on this one, and then we'll cut out of this one. We can make this big. Market fears the lion, 100%. Yeah, Simba can't move markets. Today was Simba's time to shine. Fridays is Mufasa's, Hey, thank you, Matthew. What's up, dude? I come here for information. What I do with that info is my responsibility. 100%, man. I appreciate it, bro. Thank you, sir. Hey, thank you, R. Appreciate it, man. Agree, the most genuine trading channel with no BS. Hey, thank you, man. We appreciate it. Yeah, I mean, I'll watch politics for sure. Like, it's not like I'm not paying attention. I almost streamed the inauguration, to be honest, but I decided against it because it's going to be like it's gonna be really hard for me to like talk about it because I am politically neutral, and I feel like streaming that would just have both sides mad at me simultaneously if I stream that. Again, I've told people this before, but like the reality is, like both sides would probably dislike me if I talked about my political views. They're very neutral. Like I believe people should be able to do whatever they want to do as long as it's not hurting anybody else. But I'm very consistent with that. Like, both sides say a similar thing, but I don't know. I'm not gonna get into it. Hey John, what's the situation with oil? What was yesterday's news? Yesterday's news was China and their retaliatory tariffs on the U.S. Based around oil, 15% on energy, which is oil. And so with announcement of tariffs on oil from a big consumer of oil like China, it's that's what made oil kind of volatile yesterday. I'm not necessarily a libertarian. I disagree with them in a lot of ways too, to be honest. Like I said, again, I'm neutral, guys. I really am. More fun to have John talk about jiu-jitsu. Yeah. And people complain about that. You realize people on the internet, they just complain. But I'm getting my blue belt, guys, in a couple days. I'm getting it. Yeah, people just start rooting for their party like it's their football team. And, like, I don't know, man. I think, I don't know. I used to say this all the time. And I think, I'm not even going to say it. It's okay. I'm going to just move on. Obi-Wan. The GOAT. All right, guys. Yeah. I'm just not getting wrapped up in it. I don't, it's too much. Well, businesses are the ones that do it, Larry. He says it sucks that prosperity causes inflation. Need to change that paradigm. Yeah, but it's business. It's human nature. Like if you're selling bubble gum is the example. I always say you're selling soda. Instead of bubble gum, I'll say soda. Say you're selling soda for $1 a pop, right? Not pop like a Yankee way of saying soda. I'm from the South. Okay, I don't say pop. Anyways, back to the point. Say you're selling soda at $1 a piece. And every time you put your soda out there, you got 100 sodas. Say you sell out of all 100 by the end of the day. What are you going to do? Right? Well, you might bump that price up to $1.25 a piece, maybe $1.50 a piece. If you sell out of those by the end of the day, you're going to bump the price up to $1.75, $2, and you're going to keep doing that until you get a good balance of sales versus price, right? Until you maximize price. That's human nature. That's business. I can't really knock it because that's why inflation increases over time, and that's why prices go up like pretty consistently over time, is because of that specific nuance of business. You can't really stop it. The only way to really, and I say this all the time, the only way to really combat that is to invest. You got some people that just sit on cash long term, and I get it. They're fearful of everything. But if you don't invest in something, and again, I'm not an investment professional. I'm not liable if you lose. I have no freaking idea what I'm talking about. I do trade off stream sometimes and lose off stream. You're not going to see all my trades. I don't guarantee anything. I'm not an investment professional. I'm not liable if you lose. Don't copy me. I have no idea what I'm talking about. With that said and out the way, though, if you don't invest in something, you're going to lose so much to inflation over time. I always give you guys the same formula because it's an important formula for you guys to understand. But if you have $100,000 saved, prices are going to rise an average of about 2.5%, depending on the year. So you're going to rise about 2.5% in the year. So really, I'm sorry, I did this the opposite way. It should be 100,000 times 0.975. to take away 2.5% on the year is really what it should be. And so over like a 30-year period, your 100K in terms of buying power is going to be like, say 100K in buying power today. In 30 years, it's only going to be, hold on. I missed a couple clicks. I'm going to restart it. Let me go slower. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Your 100K in 30 years is only going to be worth about $46,000, $47,000. So it's going to erode from inflation over time. Love you. Have a good day, guys. Hey, dude, how you feeling, man? I love you, buddy. Love you guys. Hey. Hey guys, how you guys doing today? But yeah, inflation erodes your buying power over time. All right, dude, I love you, man. Have a good day, buddy. And so the overarching point I'm trying to make is that if you don't invest in something, you are going to lose money over time. You can buy bonds, right? Again, you can buy bonds, and say you got that 100K. Bonds are going to pay you what right now? What's 10-year yields right now? Let me see. Treasury yields currently 4.4.5%, basically 4.5%. We'll call it 4.5. So if you have 100K and you buy 10-year treasury bonds right now, every year they're going to pay you about 4.5% interest. So every year they're going to pay you about 4.5K in this over time, right? So 4.5K over a 10-year period. Over a 10-year period is going to be about $45,000 that you're going to earn in interest over the life of a 10-year treasury bond, right? That'll curb some of the volatility and that will hedge against inflation over time. You know, if you want to, I would say it's probably better to do like, and the yield curve is inverted right now too, I think. So like short-term bonds in some areas are paying more than long-term bonds. And so you could compound it a little bit easier, meaning like you could earn your interest, put it back into more bonds, earn your interest, put it back in, and earn a little bit more, hedge a little bit more against inflation. But the S&P 500, the NASDAQ give you 10, 20, 30% a year on average over the last few years. And so there's a lot of ways to hedge against inflation. Gold, real estate, you know, you just got to figure something out. Figure out what you like, what you think is the best. Uber's forward guidance in terms of their signups were low. Somebody's asking why Uber's down, even though they had good EPS and revenue, is because their signups, I can't remember what the metric specifically was, but it's something like their bookings were projected to be down much more than expected for Uber, and that's why Uber's down. So basically their forward guidance and bookings were lower than expected into the future. So that's essentially what happened for Uber. Yeah, we had ADP non-farm employment data come in at 183 versus 150 expected. Yeah, so again, all right, guys. We got pretty big services PMI data coming out today. It's a pretty big services PMI data coming out. Be ready. Reinvented, reinvested is what I said. Pop. Look, I got family in Canada. They say everything's pop. You guys going to the store to get some pop, eh? You know, that's them. Good people though. Good people. All right. Gold at 2880s. Again, yields are down. honestly, this is good, right? Yields follow interest rates. And so if you want low interest rates, you want low yields, right? Because the yields and interest rates have a positive correlation. As interest rates go down, yields go down with it. As interest rates go up, if the Fed's going to be much more hawkish, yields spike, right? So yields going down is probably a good thing if you want low interest rates. All right, guys. Yeah, so I mean, if that happened, Peter, it would have like big financial and geopolitical consequences. The immediate impact on bond prices and yields would be that, like, when a large amount of them are sold at once, bond prices would go down, causing yields to spike since bond prices and yields move inversely. Higher yields means the U.S. government would have to offer more attractive rates to new buyers, which would increase borrowing costs here in the U.S. Interest rates would surge up. Treasury yields set the benchmark for interest rates on everything from mortgages to corporate loans and, home equity lines of credit, adjustable rates. If yields spike, borrowing costs for businesses, homeowners, and consumers would go up, slowing economic growth. It would signal a lack of confidence in the U.S. economy. Dollar would weaken. A lot of stuff would happen. Yeah. But that's a very low probability thing. It's very unlikely that they're going to... it's very unlikely that they're going to do that, to be honest. Oh, the U.S. trade balance came out at 8:30. What did the trade balance show? I didn't even cover that one. My bad, chat. The trade balance showed 0.71. Whoa, way lower. Trade balance is the ratio of imports versus exports. So fewer goods and services were exported than imported. So this was a little bit weaker thing, I think, for manufacturing at least. Can we do a quick one-on-one in bonds and yields? What are they? How they work for the government? Yeah, I mean, so bonds are loaning the U.S. government money. Treasury bonds specifically are loaning the U.S. government money, and they pay you a specific interest rate or yield to do so, right? So let's just make it really, really simple. I could loan the U.S. government $1,000 by buying $1,000 worth of treasury bonds right now. Let me see what the 1 year. Right now, the 1 year treasury yield is at about 4%. 4.2% roughly for 1 year treasury yield. And so if I loan the U.S. government $1,000, let's just say $100 to make it really easy. If I loan the U.S. government $100, they're going to pay me $4.20 a year for that year, right? I'm going to make $4.20 by loaning the U.S. government 100 in treasury bonds, right? And that might not seem like much, but when you add some bigger zeros to this, right? Like if I loan them 100K, I'm going to make 4.2 thousand a year, right? If I loan them $1 million, then I'm going to make, if I loan them $1 million, hold on. I know the number, but I'm showing you how to do it. Oh, dude, what is it? What to do? If I loan them $1 million, then I'm going to make $42,000 in a year, right? So it compounds. And, if you've got some big money and you're just sitting on cash, this is a useful thing, right? But the other nuances of all this stuff is that it does have, like, yields have a positive correlation with interest rates, like mortgage rates, home equity lines of credit, adjustable rate loans, all that good stuff, right? And those influence the economy. The lower the interest rates are, the stronger the economy is generally, right? And the Fed will actually control interest rates in the same way as a means of saving us from a weak economy. So if the economy is weak and we're looking towards where GDP is slowing, payrolls are super low, unemployment's high, you know what I mean? Then the Federal Reserve is going to be what's called dovish, which means they want low interest rates. They're going to bring rates down. And again, by bringing rates down, yields are going to go down with it, right? And eventually it'll trickle into all the other loans and interest rates that we see, like finance, like car loans, like adjustable rate loans, home equity lines of credit, all that good stuff. So it's all influenced by each other, right? And with that in mind, like bond prices move inversely to interest rates. So like as interest rates spike with a hawkish Fed, bond prices are going to go down and yields are going to go up, and vice versa. If interest rates go down, with a dovish Fed, like a Fed that's trying to prevent us from economic weakness and stimulate the economy, bond prices are going to go up and yields are going to drop. Yeah, that's right. Bond prices are going to go up and yields are going to drop. So, hope all that makes sense. It's super nuanced. You got to just learn the correlations there with it. If you do a 10-year, yeah, so you're loading the U.S. government money for 10 years. So what will happen, say you buy a 10-year treasury bond. There's better ways to do it, in my opinion, but like we'll talk about that too. Say you buy a 10-year treasury bond. They're going to give you a specific yield. Right now it's about 4.5%. So you're going to make about 4.5% a year, and they're going to deposit, say it's $100K. You're going to loan the U.S. government $100K every year, maybe twice a year. They're going to give you 4.5% interest payments. So they're going to give you $4,500 a year if you loan them $100K. And then at the end of that 10-year period, you're going to get your $100K back, right? In my opinion, I'm not a big fan of this. This is very slow growth relative to almost any other investment. But bonds are what people use to hedge against economic and financial uncertainty. So like when the markets are volatile and people are expecting crashes and corrections and people are fearful of conventional, more higher yielding assets like the stock market, they're gonna gravitate towards low risk assets like bonds, which are guaranteed. Like it's guaranteed by the U.S. government. That yield is guaranteed by the U.S. government. And again, sometimes I'll hear people say, usually it's like big crash predictors. They're like, "Oh, what happens if the government fails?" If the government fails, you got a lot bigger problems than your bond payments not paying out, sir. It's gonna be insignificant in that whole thing. Like money is not gonna be, it's also funny where you hear people say, like, if stuff ever hits the fan, people act like gold is going to be some treasured assets. Like, oh, yeah, shiny rocks. Let me trade food and medicine for a shiny rock. Gold's going to be worthless, too. Anyways. We got ISM Services PMI data coming out at 10 a.m. in about an hour. We'll put a timer up for this. This is a big one too. Services is really important. So yeah, we got an hour and yeah. So this timer is actually pretty accurate. We're pretty close with this one. I don't know where to put this though. I guess I'll stick it right here. Yeah, the craziest people, to be honest, to me, are people who sit on cash long term and don't do anything with it. Right? Like, again, the S&P will give you, I'll give you guys the options that you have, really. You got bonds. Again, bonds, even if you include compounding with bonds, right? Like, say, like, you buy yearly bonds, you take that money, you add it to the net amount, and then you get that percentage afterwards. You compound it, right? Even if you compound 4.2% right now, so 100K times 1.042, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You'll make about 50K in 10 years, right? 20 years, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You'll make, about 127,000 over a 20-year period, so forth and so on, right? So this is the compounding effect of bonds. But when you like compare it to like the S&P 500's compound effect, where you're earning roughly 10% a year on the S&P 500, you'll see how much it slumps in comparison, right? So like if you have 100K, 10-year period, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In 10 years, you're going to earn about 160 grand compound effect on average, right? We could always, now crashes and timing affect all of this. So this is certainly not guaranteed. And that's why people gravitate towards bonds, is because this is the averages, but it's definitely not guaranteed. Anything could happen. You could have a black swan crash correction event. And if you're unlucky in terms of timing, it's even worse, right? But over a 20-year period, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Over a 20-year period, you're going to about 7x in 20 years. Compounding into the S&P 500, the NASDAQ, the Dow, the Russell. The nature of it is that long-term, the more you zoom out, the safer it is, right? So like the longer you hold the NASDAQ, the S&P, the safer it is. But I always tell people, like, if you've got time until you retire, and again, not an investment professional, I'm not liable if you lose. Always make your own assessment, trade responsibly. I have no freaking idea what I'm talking about. I might be wildly wrong about anything and everything I say. Nobody can time the market perfectly. Anything could freaking happen. I'm not an investment professional. I'm not liable if you lose. Understand CFTC 4.41. Hypothetical or simulated performance have limitations. Now, with all that said and out the way, if you got time on your hands, like 10, 20, 30 years, that's the time to invest in higher yielding assets like the S&P, the NASDAQ, stuff like that. If you are about to retire imminently, it's a risky thing. It's a risky thing, and you probably want to go with more low-risk assets. But again, not an investment professional. This is just kind of how I look at it. I might be wildly wrong. All right, guys. Yeah. Sam, I'm not sure who that is. Yeah, I don't know who that is, but yeah. No, I don't have any Meet Kevin shade, Jay. I can see why the government, yeah. I trade pretty small, Nick, and so I'm not, like, I'm still kind of testing with my stuff right now. Like, to be honest, I could get a payout pretty easily if I wanted to spend, like, a lot of money doing it. But I'm trading small, and I'm just kind of building systems and strategies. And so I'm not really in a period of time right now where I can go super big and buy a bunch, and because I think that's kind of what you got to do too. Who did you look up to when you started trading? To be honest, man, like when I first got started trading, I watched a lot of penny stock gurus, and I regret it now because they were just total full of crap. And again, guys, like I said, I'm mostly an economist. Swing trader. I think I'm best at like swing trading and investing than anything else. Day trading is cool, but it's very difficult. Yeah, but is he a YouTuber as well, Sam? Apple dropped overnight. There was a catalyst. I can't remember what it was exactly. So the trades that I made the most in last year were Target, TGT. I bought Target when it was at like 107, rode Target all the way to like, I can't remember where I sold Target, but I sold it up there. I made money on Disney last year, I'm pretty sure. I made a lot of money on Google last year. I made a lot of money on I held Nvidia, and I made money on Nvidia, I think, as well over the last few years, but I'll have to go back and check that one. I made a lot of money on ARM. You know, I'm pretty sure I made some on Meta, but I have to go back and check. So, yeah. Yeah, I mean, Target is such an easy buy, man. Like, Target makes tons of money. They're overly hated for some reason, but they're just a strong company, man. And people, like, get, you know. And so when it dipped down here, 120, I think the original buy I think I bought Target originally right here. So if we look at it, I'm pretty sure I bought Target here. Because I remember isolating it, and I remember I would tell people about this trade, and so many people would talk smack and make fun of me for it. And then it got silent real quick. But I think that's like a really good look at like how to make money swing trading and investing. Like, ignore everybody else. They're too biased, too emotional about things. You got to look at things objectively and you know, objectively value, I think. Okay, gotcha. Yeah, I always got to be safe, Sam. It's all good, bro. Yeah, I mean, we're not going to promote anybody else. Sora, sorry, dude. I know one thing. He can't beat Steve. You know, that's all I know. Yeah, I can't remember why Apple dropped. There's a catalyst for it. I just can't remember what it was. Yeah, I remember Easy Mike. I got you. I remember Easy Mike. He's cool. Again, being on YouTube is such a weird thing, man. It really is strange, you know. Most people are supportive, but you got some people that just get weird. And like, it's a tough environment, to be honest, right? Like, I made the mistake a long time ago of telling somebody, like, hey, YouTube's stressful, you know, and that person ended up, yeah, I'm not going to go into it, but people are freaking weird. And so it's a weird dynamic. It really is. And so, yeah, I trade off stream. I do a bunch of stuff off stream. Y'all aren't going to see all of it because it's just a weird dynamic. I try to teach you guys stuff that I genuinely use and like my logic for a lot of different stuff, but I can't guarantee anything. I have no freaking idea what's going to happen. And I think anybody with experience is going to mirror that, because they're going to understand nobody knows. It's, again, I've said this before, I'll say it again. Generally, the people that are the most confident in something absolutely definitively working are the most new traders, because people who have been around the block long enough recognize variance in a much more profound way than people who just started, right? People who just started, they think that you absolutely know if something's going to do this or that short term. Experienced people know you have no freaking idea what's going to happen. You know, there might be an edge there, but variance is real, and it could be the best setup ever and still go against you. Yeah, I'm not really going to go too deep into it, Nick. You know, like I said, somebody talked about Meet Kevin earlier. I don't dislike Meet Kevin. I don't have anything against him, to be honest. I just don't really watch him that much because I'm doing my own thing. Obviously, he's got a much bigger channel than me, and that's okay. Like, it's not like I'm not one of those people that hates everybody that's a competitor to mine, you know. especially not the ones that are like much bigger than me. I don't really care either way. Y'all do y'all's thing. I'm not really, I'm not gonna talk smack about anybody really, not unless they, get weird with me first. What's up, Radical? Yeah, Dunning-Kruger effect is real, Nick, for sure. All right, guys. So there's 9 a.m. There's 9 a.m. We got about 28 minutes left. 28 minutes. This channel's got flavor. Hey, we appreciate it. I'm Flavor Flav for the stock market, guys. Young people might not even know who Flavor Flav is. Oh, yeah. Sales overseas might be a little, yeah. Oh, it's probably the tariffs, right? It's probably the tariff news for Apple, right? They sell a lot of products overseas, and in that regard, the tariffs are going to negatively impact them more than maybe some other companies do. I'm not really a big fan of level 2, to be honest, Harry. I think, and again, maybe there's stuff that, I know this is going to be a controversial take, but I'm not a big fan of the level 2. The level 2 is so manipulated that people acting like they can see some type of super special edge from the level 2, I feel like they're just trying to look deep and knowledgeable, right? They're just trying to look deep and knowledgeable. And maybe I'm wrong. I don't freaking know. Like, again, I don't ever use the level 2. But like people saying, oh, I see these walls build up on the level 2 and then I see the breaks. Like, look, man, big money can throw as many phantom orders on the level 2 and then remove the orders to try to manipulate it. I like the time and sales more because at least it's actually confirmed orders, right? But like I see all this different content on the level 2 and I can't get behind it. It seems too random to me. And again, I understand this is going to be a controversial take, and I get it, but it's just me in my own style. I'm not going to lie about it to try to look deep, like, oh, I'm reading the level 2 and I see all these different things. And then people are going to be like, man, John's a wizard. Looking at him. Look at the level 2. It's moving. Like, yeah, I mean, I don't know. Like maybe you get some depth of markets and stuff like Bookmap looks useful if it can take the level 2 data and visualize it for me, but just the level 2 on its own. It's too easy to get faked out and manipulated in trading, and I think the level 2 for me and my own type of personality would just make it worse, not better. Yeah, to me, it's unnecessary noise, absolutely. Yeah, I did 3. Did he day trade? I don't know. Well, it's definitely some cancels. All right, guys. Hey, we got 25 minutes. 25 minutes. Honestly, market's been mostly flat all day. We've had some upward momentum here, but look, chop, run, chop. All right. Now, it doesn't even necessarily mean we're going to run next. We could, but stagnation here. Sideways price action. Maybe the market's waiting for ISM Services. I don't know. Yeah, all good, Sam. No worries, man. Yeah, I've heard the anchored VWAP is useful as well. Thanks for the economical overview. Well, as somebody corrected me a long time ago, economical means lower, like a less energy, less effort, lower price, like cheaper, less energy spent. That's the definition for economical, right? I'm wondering what the actual textbook definition is. Giving good value or service in relation to the amount of time, effort. Yeah, cheap, basically. Using no more of something than necessary. So my definition was pretty right. Yeah, so economical is different than economy. Economic is probably the word you're thinking about. But hey, I appreciate it. Thanks, man. He said, thanks for the economical overview. In the last half hour, I've learned more about economy and investment than I have in my whole life. Hey, good, man. Don't copy me, though. I'm not an investment professional, but I appreciate it. Do you think NVIDIA was oversold with the news of DeepSeek? And what do you think of NVIDIA price will look like in 6 months? I really don't know. I think it's a tough thing to try to gauge. I think NVIDIA PE ratio is still pretty high, although it's not like crazy high. Like an example of this is Palantir's PE ratio is way bigger than NVIDIA's. I think Palantir's is almost 4x PE ratio, price to earnings, that NVIDIA is. So in terms of extension, I'm not sure. NVIDIA, I think AI takes over the world to a certain extent, and I think NVIDIA is on the forefront of that and position themselves very, very well, regardless of the DeepSeek news and how many chips are needed and what kind of chips are needed. I think NVIDIA is on the front of that right now, regardless of anything else. But even though the internet was such a useful technology at the time, we still had one of the biggest bear markets and dips and crashes in history from the .com crash. And so it doesn't necessarily mean we're not going to correct. And so in that regard, I don't know. I really don't know. I think either thing could happen. I'm just going to sit on my toes and wait. Sit on my hands, and wait. Can you explain how to read PE ratio? So PE ratio is like you can calculate it yourself very easily. You take the last 4 quarters. This is the trailing 12 month, which is 4 quarters. You add up the last 4 quarters PE. You add up the last 4 quarter EPS, and then you divide it by the share price. And so an example of this is like say last quarter was 2 EPS a share. The next quarter was 1. The next quarter was 3. The next quarter was 1 again. And that equals 7. So a yearly EPS is 7. And then say the price of shares is $200 a share. You take 200 divided by 7, and that'll give you a PE ratio of about 28.5. Right? Like that's how you calculate PE ratio. Now, right now in this current market, under 30 is pretty good. Right? Like most Mag 7 stocks are not under 30. I think Meta is under 30 right now. I think Apple might be. I'll have to go back and look. But a lot of them are not under 30. Conventionally, I would say good is like 15, right? So the lower PE ratio, the better. The more bang for your buck in terms of like earnings versus price in shares. And so, again, the lower, the better it is. The easiest way to gauge this is to compare it to the last 10 years PE ratio, right? And so see what the average PE ratio is for the company if it's been around the market for over 10 or 20 years, and then compare that to what it is now. Well, it'll give you another look at like value of said company in terms of history, if that makes sense. So just compare to the last 10 years PE ratio. You can use AI to do this as well. You can say, hey, AI, like I could say, like, look, let me find AI. So I could say, what is the average 10-year PE ratio for Meta right now? Meta has a current PE ratio of 29. Over the past decade, Meta's PE ratio has shown fluctuations with a high of 108 and a low of 865, resulting in a median PE ratio of basically 29.99 during the last 10 years. So basically right now, Meta is priced appropriately relative to the last 10 years PE ratio for the company. Right? Meta's PE ratio currently is about 29.4. Its average is a little bit over that. And so, it's pretty, what investors would call it, it's pretty efficiently priced at $700 a share for Meta, which is interesting. But also, like, PE ratio is not a perfect metric. Like, it has some flaws. It's not the end all be all. You want to look at an array of different things when you're gauging value for companies. Disney earnings were good for the most part, although they didn't hold most of the gains. Yeah, Palantir has. With that said, Palantir's PE ratio, I asked AI to do it and it didn't give me 4 something, maybe for GAAP, which is generally accepted accounting principles. But it showed Palantir's PE ratio was like 180 or something crazy like that, which is high, of course. Supermicro Semiconductors is popping up today. Did they have earnings this morning? Yeah, Supermicro Semiconductors is up big. I don't know if they have earnings or news today. Supermicro is ramping up full production of NVIDIA's Blackwell rack scale solutions with NVIDIA's HGX B200. So that's the news on Supermicro. Yep, so here's the news. $700 is efficient. I'm sorry, we are living in the metaverse right now. No, that's not what it is. We're looking at, again, Boris, I think you're looking at everything one-dimensionally. I'm not saying it's price good right now. I'm talking about in terms of PE ratio, like, it's efficiently priced versus the last 10 years average PE ratio for Meta, right? And I think people see, ooh, big number bad, right? Not necessarily the case, right? You're looking at it one-dimensionally. You're only looking at price, right? If a company goes up as much as Meta has, but its earnings increase in a similar ratio to the stock price, is it really overpriced? No, it's not. It's pretty evenly priced versus the last 10 years. Doesn't mean it's not going to correct. Doesn't mean it's not going to pull back. But you're looking at only price, Boris. Like, you got to learn about, like, the difference between price and earnings. If a company's earnings increase parallel with the price, then it's in the same position it was, you know. I mean, it's in a better position, but the ratio is the same. All right, guys, we got 15 minutes. All right, we're still pretty stagnating here in charts. Nintendo is going to hold a Switch 2 event on April 2nd. The Nintendo Switch 2 is coming out, guys. Yeah, I saw ACB rip it up too. How does a company start and make stocks for their company? They go to the stock factory and you know, they just start building stocks. It takes a lot of different ingredients, you know. I know, like, a stock is made up of, like, sugar, spice, and everything nice. And so they go to the stock factory. The stork brings them there, and then yeah, they produce the stocks there in the stock factory, sir. No, obviously I'm joking. A company goes public. There's a private company and a public company. A private company is what it is, a private company. It's one that doesn't have to necessarily show how much it makes, how much it earns, the inside information. It's not publicly listed on the stock market or any exchange. It's what's called a private company. Think of X right now. Twitter is now private. Elon took it private. It used to be public. Now, generally what happens is a company starts out private. All companies are private for the most part when they start out. They start out private. They start producing money, right? Eventually, the CEO, the reason they want to go from public to private or from private to public is money related, right? Like, they have much better potential of earning money. Like, think of the public market like funding, right? So when a company goes public, they get public funding. People are able to invest, and that allows the company to bring in much more revenue than it did privately, right? But there's some cons to that as well. Like a public company has to report quarterly earnings. They got to do they got to go through a lot of different hassle and red tape to be publicly listed. And there are risks. If the company doesn't IPO well and fails, the company could go out of business going public. But if it's a good company, generally they're going to be okay, and they're going to earn money through offering shares to the public, and the CEOs and the founders are going to earn the most a lot of the time, not always, but in general they're going to earn the most when they go public. And so there's a lot of nuance behind that, but yeah, that's what it is. Like Facebook started out privately back in the early 2000s. Eventually by 2011, I think, Facebook was so big and had gained so many users they decided to go public, and their IPO was super successful. They ended up making billions and billions of dollars from the IPO, ultimately propelling Mark Zuckerberg to be one of the richest people in the world from Facebook going public, right? And it's only grown more and more. Now Meta's at $700 a share is an example of why companies want to go public, and he's super wealthy, of course. And so you're asking about stocks. So stocks are, you got to think of it like stocks. The float is how many shares the company decides to create, right? The float are how many shares that are available to the public. The outstanding shares are how many shares the company decides to create. And obviously, if you want to find the value of a company, you multiply the outstanding shares by the price of the shares, right? So if a company has, a billion shares, and each share is worth $12. That's a $12 billion company, and that's how you calculate it. And so say you're the CEO of said company, and you founded the company, and you're the CEO, and you keep, 30% of those shares, you're going to have $3.6 billion, in net worth and value in the shares that you own. And you can decide to sell those shares and lock in that money, or you can decide to sit on those shares and let the company grow more. And that's what happens with these CEOs. Yeah, at inception, they decide who gets ownership, shares, how many shares, and whatnot. Uber CEO thinks autonomous US dollar $1 trillion market in the US, according to CNBC. He thinks the autonomous market is up to $1 trillion in value. The question is, how do they compete with Tesla? Or if they partner with Tesla, it might be even better. But I think there's a chance that when full self-driving comes out, it renders a lot of Uber and Lyft's models obsolete. There's also a chance that when FSD comes out that they partner with Uber, and that makes both markets grow more exponentially. I don't know. Hey, later, Lolo. All right, guys. Also, if you haven't already, again, check out TopStep. TopStep gives you a demo. They test your skill with a demo account first. If you pass the test, they fund you. If you fail, you generally only lose what you pay for the base package, which the base one's $49 a month. It's a great way to learn how to day trade. You got to think of it like a souped up demo account. They give you a $50K demo. If you can make $3K in profit day trading on that $50K demo without losing $2,000 first, following their rules and conditions, you want to confirm it all with them first. They fund you $50K, 90% split, and you get to keep your first $10K in profit. And so when you compare the value there, the base one's $49 a month. That's your risk, right? That's a lot less risk than funding your own account 10, 20, 30 grand and losing that like most new traders do. And if you fail, you're out $49. It's not the end of the world. Comes with real-time data. If you were going to pay for a demo account in futures with real-time data, in some places it's going to cost around the same ballpark anyway. TopStepX has zero commission. And again, it teaches you how to trade. It teaches you how to follow rules. You have to learn to follow their rules. You got to learn to trade under pressure. You're still risking something as well. So it's a beautiful like middle ground of pressure. You're still risking something, but you're not risking the full extent of 10, 20, 30 grand like a lot of new traders do when they start day trading. They end up risking and losing their first couple accounts. I know I did. But again, understand CFTC 4.41 hypothetical or simulated performance have limitations. I'm not an investment professional, and they pay me money, so I'm biased, of course, in their favor. Understand all this stuff, guys. Can't guarantee anything. You want to confirm it all with them. But in my opinion, it's genuinely really, really useful because almost all day traders lose. Most of them lose thousands. If they deposit or, thousands, they usually lose it in the beginning. It just doesn't make sense to risk your own money like that in the beginning. Instead, try a funded account program. If you pass it, you get a $50K funded account with a 90% split for the base one. You can also buy the more expensive ones and you get $150K funding on the top one with a 90% split. And you get to keep your first $10K in profit as well. So that split is similar to funding your own account, but the risk is less, right? And again, if you use TopStepX, there's zero commission. And so I can make $10, $20, $30 trades and still net most of the profit on TopStepX with that aspect of zero commission. But again, confirm it all with them. I'm biased, of course. But if you want to check it out, here's the link. Great way to help support the channel. Long-term bonds, almost over 90. Yeah, well, that's just because interest rates are a little bit lower. Yields are going down. The price of the underlying bonds are going to be going up, which is TLT is 20-year treasury bonds prices. Super Micro up 10%. Yeah, Super Micro is up 10% after they announced that they're going to be like dealing with a lot of the Blackwell chips or something like that. Let me see. Where'd it go? Yeah, Supermicro ramping up full production of the Blackwell rack scale solutions with the NVIDIA HGX B200 is what it is. Teladoc Health is going to acquire Catapult Health in a $65 million acquisition, potentially. Can you explain roughly what you have to do to get funded with TopStep? Yeah, so to get funded with TopStep, again, they give you your 50K demo for the base one, is what I'm looking at. You have to earn, you got to make 3K as your goal, right? So for the 50K demo, you got to earn $3,000 in profit net, right? And there are some fees, but there's no commissions. So, that's useful. But again, you got to earn 3K in profit on the 50K demo. The max loss, I believe, is 2,000. So it's a 2 to 3 ratio. You can't lose 2K. You got to make 3K. It's a 2 to 3, which is a reasonable ratio to test your skill, to be honest. You can't use more than 5 contracts, which is honest of regular e-minis. You can't use more than 5 contracts. I think you can't use more than either 20 or 30 micro contracts. But again, to put it into perspective, 5 contracts of the e-mini is plenty. Like with 2 contracts of the e-mini, you can be down thousands or up thousands in minutes. It's incredibly like that's plenty of size, 5 contracts. The only other nuance that I can understand, there's some prohibited rules in trading that you want to confirm this all with them. This is just from basic memory, as well as look at the market pop up testing that 2155 level. But then also, it's going to take you a minimum of 2 days to pass the challenge, meaning you can earn 1,500 one day, 1,500 the next. And now they're a little bit loose with this, so you can earn, from my experience, you can earn 1,450 one day, 1,550 the next to equal 3K, right? And they'll still pass you, and you'll get the funded account or whatever. And then once you activate the account, it's $100 and something to activate each funded account. But yeah, that's what it is. I'm pretty sure those are the rules. For the regular NQ, that is plenty of size. The regular NASDAQ moves quick. I almost, the only time I'll trade the regular NASDAQ is if I build up a big cushion on the day. Yeah, you can't earn more than 50% of 3K in a day, meaning you have to earn 1,500 one day, 1,500 the next if you want to pass it in 2 days, or you can earn $1,000 one day, $1,000 the next, $1,000 the next, and then pass, right? But you can't break, if the profit goal is 9K, I think the top one, the 151, you got to make 9K in profit. You can't earn over $4,500 in any given day. what can make the Fed in quantitative tightening? Well, quantitative tightening is a high interest rate hawkish action by the Fed. So QT is a hawkish action by the Fed. It's basically them reducing their balance sheet to take liquidity away from those markets and ultimately help potentially inflation get better. What can make the Fed in QT? Inflation coming in low, economic weakness can make the Fed in QT. Because you got to think about it in the Fed's mind. The Fed, QT is a balancing effect right now where it's helping curb inflation, which is a big fear in markets. If the economy starts to go weak and look like GDP starts dropping, unemployment spikes, stuff like that, the Fed might say, hey, like we're being a little bit too hawkish. Let's end QT and, lower interest rates or something like that if it gets really bad. Or if inflation is just around targets, like if inflation is under control, there's not as much of a need to do quantitative tightening as there was before. It's really trying to protect us against inflation is what the Fed is doing QT for. Yeah, all good. You don't have any maximum time limit, I think, Michael. The Fed didn't cause record high inflation, Kevin. Again, you got to look at it in terms of we had a global macroeconomic black swan event. Look at the market pumping up. Market just broke highs of, I don't know if it's highs of the day or the last few hours, but market just ripped up. Again, people like to blame the Fed for everything. If the Fed didn't do quantitative easing and lower interest rates after 2020, people would be crying that the Fed's not doing anything. So no matter what the Fed does, people are going to complain about it. What caused record high inflation was supply chain restraints from the pandemic. That's what caused it. And that's very obvious is what caused it. It wasn't the Fed. It was supply chain issues and the consequential effects of them. And that's very obvious, right? 2020 happened. That's what caused inflation. The Fed had to step in, do quantitative easing. And I'm not even saying I necessarily agree heavily with it. But either way, it wasn't a good scenario. And it's something where inflation was going to spike after 2020 no matter what, almost certainly. Yeah. Again, I disagree with the stimulus effects of it and certain stimulus checks and stuff like that too. But it's a tough situation. You got to understand, the Fed did all that stuff to try to save us from a worse recession and depression. And if they didn't do that stuff, it would have gotten much worse than it did. And then people would be complaining about that too. So it's nuanced. I don't know if there's a right or wrong answer. All right, guys, here's the opening bell. Good luck. All right, guys, so market's open. Here's gold on the top right. We're going to put up AMD, see what happens to AMD at the opening bell is what I'm curious about. Yeah, well, ADP is, again, it's not the biggest market influence, to be honest. I'm seeing some red action at the open, but it's a little varied. I'm going to have to watch AMD. I'm going to put NVIDIA up here, too. NVIDIA's spiking up to 120s now, though. That's good. Yeah, but it wasn't printing money. The way they printed money was quantitative easing, which is where they printed money, by creating bank reserves and then using those bank reserves to inject liquidity into the market through bond and other financial asset purchases. And they did that to try to save us from an oncoming recession, from too little people working, too little people spending, and the consequential effects of all that stuff, man. So, like, yeah, it certainly made it worse. But if they didn't do it, we would have gone into a deeper recession and depression, right? And so in that situation, we had to pick, would you rather high inflation or recession and depression? Most people, I think, would choose high inflation at the time. And maybe in hindsight, it would have been better to just let us into the recession and depression and kind of rip the Band-Aid off in that way. And I kind of agree with that to a certain extent. But hindsight's 2020, you know. And I think we're in the middle of a global macroeconomic event, and that was difficult to gauge. And, you know, oh, I agree with that straight for the most part. Yeah. All right, so we got this level. We rejected exactly off, not exactly, but off of my 552 level here. Market's still dropping a lot, though. I'm going to wait at least a couple more minutes and let the market really play out first. Let me make sure I got the right account up. Okay. This is the right account. Let me make sure. Yeah, this is the micro NASDAQ. Let's get my trading up. Still gotta wait a little bit, let things settle here. Yeah, but they knew it and called it transitory instead of doing their job. So, Kevin, what do you think their job was? What do you think they should have done that they didn't do in that period of time? Honest question. What do you think they should have done in that period of time, Kevin? I'm curious to know what the answer to that is. I'm not even saying you're wrong. I'm just curious to know what, you know, what they didn't do, what that they should have done in that period. Yeah, we're looking at Meta. Meta's flying all the way up to almost 710s. It's dragging the market back up. Look at AMD popping back too. Nvidia bouncing back some as well. Again, guys, remember, we got ISM Services data coming out in 25 minutes or so, 25 minutes. Where'd the music go? I thought I put the music up on this chart. Okay, we got that one. We got that one. Where'd my music go? Oh, there it is. All right, cool. All right, look at the market pop up here. All right, look, we tapped the 552 level. See what happens. Everything looks pretty bullish here, though, to be honest. Like, AMD is pivoted all the way back up. Yeah, look, there's the market rip. Nvidia's ripping back up, too. All right, we're going to buy this dip. All right, we got two contracts here. Gonna let it work a little bit. Profit target is 64s, but man, that's a big turn. I had to take at least one off there. I just didn't like it. It'll preserve my risk here, hopefully, but it's a big upwick. I'm gonna just cut this. We lost like $25, $30. I might have been right too. The problem is AMD retraced, Nvidia retraced, Meta still ripping up. I should have held it, man. See, this has been happening more and more. I got to get better at holding longer term positions, and so I think I'm going to establish a rule that I have to hold it longer and follow my reward and risk targets. My guy Kevin's on Google right now trying to look up. Yeah, so we were right about this too, man. We were correct about direction. Let's see what AMD does here, though. It's important level here. No one can buy a house. They did a terrible job. I think you're slightly out of touch because you are young and doing better than most people your age. Maybe. But again, the reason house prices are up is because of interest rates being high. So like interest rates are high. House prices in that regard are expensive. Mortgages and rent are expensive right now because interest rates went up. The reason interest rates went up is because the Fed was hawkish. The Fed was hawkish because inflation was a problem. So like a hawkish Fed is combating inflation. And so I don't know, man. I think it's definitely really nuanced. But I think I'm not saying you're wrong. What I'm saying is that's a super difficult situation where I know it's easy to blame politicians and the Federal Reserve for what happened in 2020. But I think you also have to zoom out, be objective, and look at it as like a kind of crazy black swan global event that nobody could really avoid, you know? So it's just a weird thing that happened. It's not really like, I don't think we can put all the blame on somebody. Like in hindsight, sure, you could have done better. We could have done better. And that's true. Absolutely. But that's always true. And so, yeah. Yeah, so we're going to look to see if we can buy it here. Well, I'm usually a scalper is what it is, right? So I don't know if you'd call me emotional. I'm definitely top 3 most emotional ever. But I'm mostly a scalper, and so I'm used to cutting my trades very quickly. But I think especially with stuff like this, I got to learn to just hold out a little bit longer. I'm watching AMD, though. The real thing pushing up markets, Google up big, Meta breaking highs. I think it's lifetime highs for Meta. So I think Meta's continuing to break lifetime highs. That's driving the market up a lot, too. Regardless of Snap beating revenue and earnings, why is it down? I don't know. Yeah, I really don't know. Profit taking, bearish. I really don't know why Snap's down. Because just the easiest way to put it, Amir, is that just because a company has good EPS and revenue does not mean it's going to go up from earnings, right? The real moves are happening prior to the earnings coming out. And so Snapchat is up from the last 2 weeks. You know, so 2 weeks ago, Snapchat was at $10.40 a share. Today it's at 11.20s. That was the baked in move that we're getting from earnings. And so a company doesn't have good EPS and revenue and always go up. If that was the case, nobody would do anything else. People would just sit around and wait for earnings to come out. If they were better than expected for EPS and revenue, they would just buy it. And if it always went up, everybody would be billionaires. You know, unfortunately, it's not that easy. And the real moves are happening in the weeks preceding and coming after the actual earnings release, if all that makes sense. But I appreciate the donation. Thanks so much. Yeah, I'm trying to take more of range-bound trades. And again, we're going to buy this dip here and see if we can actually hold. The goal is to hold up to 76. And I'm going to try to be stubborn with that level, 76. My risk is if we break under 58s here. At 67s. I think as I get used to this, though, I should probably start to take a little bit smaller size. And so I'm going to limit one of my shares here and cut it, basically break even so I can hold it longer. Again, my risk here is 57. My reward target's going to be about 76 up there. That might be a little bit worse than 1-to-1, but that's the goal right now. And so I'm going to start small and see if I can slowly... Alright, so we confirmed off of my support level. I'm going to move this down to actually right here. And we're going to have to cut it pretty soon. We'll let it test. All right, so we had to get out. We cut our loss. It's all right. Yeah, all good, Abel. It might fake me out just a little bit. I think I have to give it a little bit more room there. We're just going to look for good risk-reward situations. See, look, there's my reward target. It would have worked. Barely stopped me out, but that's okay. It teaches me I should give it a little bit more room underneath my levels. The bounce would have worked. Yeah, I haven't been doing good this week, man. I did great the last few weeks, but this week I've just, for whatever reason, haven't had the best trading. Google's starting to pull back down a little bit. Hey, nice. All right, so here we're dipping down. I'm gonna jump in here. Risk level is gonna be about 540s. And then I'm gonna go ahead and just cut that and take the win in. I was gonna shoot for around there anyway, and we bounced right off of that 552 level, but small day so far here. Yeah, dude. I mean, we're not gonna win every month, every week. That's not a reasonable expectation. My levels are holding really nicely too, though. AMD starting to pop. Again, we got services PMI data coming out pretty soon, guys. So the base services PMI is dropping in actually 2 minutes. So we got the base services PMI in 2 minutes. It's expected at where we go. It's expected at 52.8 in 1 minute, chat. 1 minute. 52.8 in 1 minute. So I'm going to slow down my trading. I'm wondering how much this regular services PMI data is going to show. John, how do you handle consecutive losing days? Scale down is what I do personally. Do you think crypto assets can have a bull market if we are in quantitative tightening? Yeah, I think so. Here we go, guys. We got 20 seconds left. Regular services data. The big one's in 15 minutes, though. But 52.8 is what's expected. We'll see how much the market reacts here. 15 seconds. All right, here we go. And 5, 4, 3, 2, 1, 0. There it goes. Let's wait for services PMI data. Nothing yet. Nothing yet. Waiting for services. For some reason it's not out. I don't know why. All right, so there's a big pop up here. All right, so services hasn't dropped yet for some reason. Let me see if it showed up anywhere else. Are y'all showing services yet? Again, Barkin says that there are jobs out there that have been devalued, that have been revalued due to scarcity. All right, there we go. Services came in at 52.9. 52.9. It just dropped. It was a little late, to be honest. It was about 45 seconds late, but 52.9 is what it showed up at, chat. In the real services data, the ISM, the Institute of Supply Management one, drops in about 14 minutes. Chat, 14 minutes. Yeah, scarcity. So again, Fed Barkin says that there are jobs out there that had been devalued, that have been revalued due to scarcity. Meta's still pushing up, testing highs. We're a little bit too high up here for me. Nvidia dipping down to 121.60s. All right, guys, we're sitting tight waiting here, chat. Again, we got 14 minutes. Market's really stagnating here and sideways. What do y'all think the market goes here, up or down? Bitcoin pushed up a little bit today. Meta's up there big. Bonds are pushing up, which means interest rates are going down, potentially even more, which is good in some ways. A lot of people are going to say it's good. Intel. Yeah, AMD down to 107s. Nvidia's still up there. Again, Meta is what's flying today too. And Nvidia's pretty choppy. Meta, look at Meta. It's breaking lifetime highs pretty consecutively over and over and over again. It's 716s now. Snapchat's still falling down some more. Meta still ripping up. It's at 716s. Breaking highs again here for Meta. Look at this. It's dragging the market up too for sure. Netflix waking up some as well, but I'm going to take a small short here. My risk is going to be right here at 593s. Reward target's going to be right around 64. And so a tight risk trade. And I'm going to just give it time. I'm trying to give myself longer time to take these trades. Again, my reward target's going to be at about 70, I think. Risk is going to be up there at 92s. That's good enough. We'll take that. And it looks like we got out right in time. Doing a little better though. Kind of flat on the day mostly so far. I'm surprised Amazon is not more affected because of tariffs. Yeah. I would think Amazon would be one of the most affected just because of how much goods are sold to the U.S. for Amazon purposes specifically, like Alibaba and stuff like that. How is Alibaba? Alibaba's still flying high, though. Meta just broke highs again. Yeah, so again, we should have taken 70, which was our original reward target here with a tight risk. Yeah, I did see that, Corey. All right, guys, 9 minutes here, chat. 9 minutes. If you see my support and resistance levels and you like how I'm documenting them, we did post a video not too long ago. Here's that video right there. If you want to check it out, there's the link. I could buy this dip and bet on choppiness leading into this. But I think it's a little bit too late. I should have gotten it when it was down here. I might be able to still catch it. We got a nice little risk level. I would use maybe like 47s. Give myself a little bit of room under 50s, but I think it... We'll try it. Risk is down here at 47s. Reward target's going to be up here at 75s. Let it play. Kind of flat so far. Again, do not copy me, not an investment professional. We're kind of flat today too, so it's kind of back and forth, to be honest. All right, we're kind of flat right now. Kind of going back and forth though. Again, we had said 47s. We just tapped that. We'll let it test fully here. We cracked this low one more time. I think I just got to cut it. It's right there, but how long we got? We got 6 minutes, chat. So a big rebound right at my risk level here, but I'm going to cut this pretty much flat and get out for a tiny loss here. We're too close to the economic data, and I think there's too big of a chance that this is going to turn into resistance. I might have exited a little bit too early, but again, I don't like what Google's doing. I don't like what AMD's doing stock-wise short term, but I think Google's still very strong long term, and I think Google's going to be fine. I think they're a great company personally. But yeah, I'm just going to wait it out. We got the economic data coming out in 6 minutes. We'll look to trade after that. Yeah, I'm worried about this level rejecting here, but... Why is Meta ripping? Meta's just been breaking all-time highs. All right, guys, we got 4 minutes. Yeah, the short might, I don't know. Yeah, see, this is what we were worried about anyway. So we got a pretty good value exit there, which is fine. Lost much less than we would have. Kind of flat on the day still. I haven't had good trading. I don't know if it's all the earnings and economic data volatility, but the last 2 days, last week was great. Week before was great. This week, eh. All right, guys, less than 4 minutes. Earnings. AMD missed earnings. Why don't you trade gold? It's just not really my style. All right, guys, economic data comes out in 3.5 minutes. 3.5 minutes. You guys red or green today? Hopefully y'all are doing better than me. Yep, there's those resistance levels showing why I got out. Maybe it's early though. I don't know. Again, we got less than 3 minutes. Hello? Alright, guys. Red. Yeah. Omega red. Red. Lost 1,000 this week. Yeah, it's a tough week, man. If you're green, doing good. Good job. Alright, guys. 2 minutes. 2 minutes. Yeah, it looks like my exit there was the right move. This support level looks okay, but we got economic data coming out. All right, guys, ISM Services data coming out in 2 minutes. Hopefully you guys are ready. We'll see if we can come back out of the rafters now that the economic data is coming soon. All right, guys, we got a minute and a half. All right, guys, 1 minute. Hey, we got 1 minute here. You guys ready? All right, guys, remember ISM Services expected at 54.2. 54.2. We got ISM Services pricing as well. All right, chat, here we go. 25 seconds. Hit the live button next to the play button. Make sure you're fully caught up on stream, chat. We appreciate it. Look at that resistance level tapping here. All right, guys, here we go. 10 seconds. 5 seconds, really. Here we go. 5, 4, 3, 2, 1, and... Man, my timer was exactly right. ISM Services data showed 52.8. Weaker services than expected. 52.8 versus 54.2 expected. Weaker services, which is honestly making the market react positively, potentially because of less inflation worries. Again, we showed up at 52.8 versus 54.2 expected. Lower than expected, weaker services sector than expected, and that's making the market, so far at least, react positively. Sometimes the first move is the wrong move, but I do think the market fears inflation to a certain extent right now, and a weaker services sector is a little bit more music to their ears if the market fears inflation. Bond prices also spiked up a little bit, which would show lower interest rates and, yeah, maybe potentially like a more hawkish Fed, stuff like that. Yields, I'm sure, are going down. If we look at yields right now, I'm sure they're dropping, right? Yep. Bond prices going up. We tapped off of 605s, but again, 52.8 versus 54.2 expected here. Yeah, I told you guys data was coming out. Here's the data right here. We'll put it up on screen. ISM Services 52.8 versus 54 expected. 54.3 or so expected. There's the data right there on the bottom of the screen here. Now we're getting a pullback. Maybe the first move is the wrong move. I'm kind of tempted to buy this, but oh wait, should have bought it. We'll see what happens though. It's a big upwick. Steve, the GOAT. Somehow Steve just knew, right? Yeah, again, market fears inflation. We're kind of back to good is bad, bad is good scenario where inflation's the big fear. Anything that shows a strong economy makes the market panic. Anything that shows a weaker economy makes the market go up. And I think this is really interesting nuance ahead of Friday's non-farm payroll and unemployment report. It's a big nuance, important nuance, I think, ahead of this report. And again, if you want to check out TopStep gives you a demo. They test your skill. You can make $15, $16, $11 still net profit on TopStep X because there's zero commission. Tiny amount of fees and zero commission. The futures market, guys, has no PDT rule. So if you want to get around the PDT rule, futures is what you should be trading. And TopStep is the best way to learn how to day trade futures. They give you a demo. They test your skill with a demo account first. If you pass the test, they fund you. If you fail, you only lose what you pay for it. The base one's only $49. You got to make $3K in profit on a $50K demo without losing $2,000 first, following their rules and conditions. If you can do that, they fund you $50K with a 90% split, and you get to keep your first $10K in profit, which is similar to funding your own account, but the risk is only $49 for this. And so it's kind of like a souped up demo, teaches you how to trade. Most day traders lose. I think that's the same regardless of where you go, including here, but it's a lot cheaper to lose here than it is to lose thousands of dollars funding your own account and losing that, which is what most day traders are going to do, in my opinion. They've paid out almost $200 million since 2020. They fund thousands of traders. Just a great way to learn how to day trade. But again, they're an affiliate of mine. I am biased because I get paid by them. And so confirm everything with them first. I'm not an investment professional. Understand CFTC 4.41. Hypothetical or simulated performance have limitations. Sometimes I trade off stream. Sometimes I lose off stream. And you're not going to see it. But if you want to check them out, here's the link in chat. Great way to help support the channel here. I appreciate the love. Look at this big dive coming back down. Something just happened. Either it's a delayed response from services or some type of other bad news just showed up. Look at that candle here. This is a big candle. Something just happened fundamentally in markets. Some type of catalyst just happened, in my opinion. Look at this candle. Wow. Look for stock prices. See if anything's falling in stock prices. I'm trying to look at it quick. Something just dipped heavy. The NASDAQ just dipped heavy. It's not AMD. It's not Meta. Meta fell back pretty quickly here. Netflix. Apple? No. It's not Nvidia. Nvidia's going up. Tesla? Tesla's falling fast. Something just influenced the market. 3M got a grand jury subpoena from the U.S. Attorney's Office for the Western District of Wisconsin, according to an SEC filing. Is it 3M? I don't know if that's big enough to move markets. Yeah, but usually there's a catalyst for a drop like that candle. But maybe not. I don't know. You never know. Yeah, services was weaker than expected for sure. But lately the market's been reacting positively to economic weakness because of inflation fears. Yeah, it could be Fed speaking. Let me see. All right, so ECB's Lane says that tariffs are a downside risk to activity, but inflation impact is uncertain. Okay, so we just got some news that Apple stock is falling, and they're blaming China trade tensions. China has been a weak spot for Apple for some time. Trade tensions between Beijing and U.S. certainly don't help. There's a report that came out that said China is looking into probing the iPhone maker's app store, but that came out earlier. We saw that earlier. AMD's starting to creep back up. Nvidia is still pretty strong in the wake of all this stuff. Tesla's down big, though. 3M is down, too. Bowman speaking. Nvidia's breaking highs, though. I'm going to buy this dip. We're going to look for a profit target up here at 550. I'm going to add a little bit more to this, too. And our risk is going to be down at 513s or so. I'm gonna take half off here. It just went the opposite direction to me, so I'm gonna unload a little piece of that. Pretty much break even here and give the rest some time. AMD's popping up. That looks good. Still kind of flat in the trade. We just rejected that top line too. AMD just rejected the top too. Tesla. We're kind of flat today though, guys. Like, we're not down a ton, to be honest. And I mean, we're down for sure. This trade we're kind of flat on now, but just difficult to gauge everything with all the catalysts. Last week we did really well though. This week, not really loving this week, but that's normal. Losing weeks are pretty standard. So now we're back out up to flat here. Slightly green now. See if the green keeps pushing up. Again, if you want to trade with me, trade on Top Step. Link is in the description. Great way to help support the channel. These are the OG AirPods. Just such indecision. I don't like this on AMD though, right? Gotta be prepared to cut it too, but I like my risk level, but I don't know if I'm loving this. Huge pop back up. We've been flat most of this trade. And I'm just going to stick to my levels here, to be honest. Dreykus versus Sean Strickland. Yeah, that'll be a fun fight, man. I thought Strickland won the first one, to be honest. But it was close enough where I can't really complain much about it. All right, my patience is here. We're over some levels. There we go. Again, we're looking at 552 reward. There we go. I don't know whether to add to this or not either. Thinking about it. I'll add to it a little bit. See how it goes. See if we bounce off of that spot. Kind of a double top up here, though, is the only risk. So we might pivot our profit target to up there if we bounce. Nasty drop. Yeah, we're gonna have to cut it. It wasn't bad. Like, we've confirmed off of my risk level numerous times on this 514, 513 level. And look, we bounced right off of that again. But we're kind of just chopping our way out. The problem is AMD's breaking down. Right, so AMD is dumping down here. Meta's starting to pull back too, so it does kind of look a little weak now. Meta's falling. Nvidia's falling. Tesla's already weak. we're just getting stagnation here. I'm just glad I'm not down too much. Like, we're just doing this basically all day. Or not all day, but for the last 1, 2, 3, 4, 5, 6, 7, 8 minutes. Is it time to sell? Almost. Yeah, it's just a rough day. It's just kind of choppy. A lot of sideways range. It's all right. Again, every week's not going to be good. We had a great week last week. Week before that, too. So it's normal. Like, we haven't really, we talked about 513 as my risk level. And then look at it. Like, we're literally tapped off of it numerous times. So I like it now, but we got to cut that quickly. Fast little break. I'm going to get out of here. I mean, we're down like $100, so it could be a lot worse. So yeah, we'll just come back and live to fight another day. And yeah, see you guys later. Y'all be good. U.S. services grow slowly. Yeah, I mean, it's tough to tell. I mean, here's 513s. Hey, later, Blaze, Tiny, Sam, Joe, Paul, Darren. I don't know about Meta. Meta's like a big upward move, big downward move in a lot of them. And so, again, I'm not really trading the best today. I don't know if I'm reading the market the best. We'll be on Top Step TV later at 1 o'clock Central Time, though. So we will be on Top Step TV later on today. So I will see you guys there. Y'all be good. I love y'all. Y'all have a great day. We'll see you guys later. Hopefully we can do better tomorrow. Tomorrow we have jobless claims, unemployment data. So we'll see. Oh, yeah. Join our Discord. It's completely free. Doesn't cost a penny. I'll put that link up right now. Check it out. Here's the link. There's the Discord link. Hey, I'll see you guys later. Y'all be good. Have a great day.